Besides AI, tokenization of real-world assets is probably the only industry that is currently experiencing triple-digit percentage-wise annual growth rates. I expect it to produce multiple billionaires and potentially even several trillionaires in the coming decade. And unlike AI, it requires significantly lower capital expenditures. Therefore, if you're interested in ambitious projects in exploding industries, tokenization can be your best chance. My name is Boris. As a co-founder of Stobox, I worked with over 70 projects tokenizing various kinds of real-world assets and helped multiple successful businesses to be launched in the industry. And in this video, I'm going to describe you fundamentally what asset tokenization is and what are its main applications and benefits. Let's go. Let's start with a definition. Tokenization of real-world assets is the process of creating cryptographic tokens that serve as a record of economic and legal rights related to real-world assets. It is a bit of a complex one, so let's now unpack this definition. Real-world assets mean either a physical brick-and-mortar asset such as real estate, commodities, rare metals, etc., or any business that generates tangible real cash flows. Such cash flows doesn't necessarily have to be generated from a physical asset, so it can be a virtual business, including an equity in a fully blockchain business. However, they have to be generated from the actual creation of value and delivery of a service or good, rather than a purely speculative activity. So, for example, equity in a blockchain company would be treated as a real-world asset, and generally private equity is one of the main types of assets currently being popular in tokenization. Similarly, tokenized treasuries of United States, even though don't relate to any specific physical asset, still are considered a real-world asset. The next part is economic and legal rights. This can represent either a right of ownership, which is what you most commonly think of when people say tokenization of real-world assets. Next part is economic or legal rights. A most common one is the ownership right, and this is one people think of most commonly when we speak about tokenization of real-world assets. So, for example, it's typically believed that to tokenize real-world asset means to represent the direct ownership of that asset in the form of tokens. But also other types of rights can also be embedded in the tokens. For example, a right to cash flows. So a token can represent a rental cash flow from a rental property. Or a real-world asset, the token can represent a right to use or to receive upon delivery a certain physical asset, such as a gemstone or a gold bar from a custody. Lastly, the most misunderstood point of the definition is the word record. Notice that any kind of rights exist only in as far as they are recognized and recorded. So, for example, the title to a property exists because it's recorded in the government register of property titles, or the ownership of a company exists because it's recorded either in the shareholder register maintained by directors, or a central securities depository, or a government registrar. Therefore, recording of a right is what defines a certain right. And what tokenization does is changes the way in which the right is recorded. So instead of being recorded in a privately, centrally maintained, isolated database, it is instead maintained in the blockchain, which is a decentralized cryptographic database where records are entered and changed via a cryptographic consensus process. This record part is the key source of the benefits of tokenization, because now this right, instead of being recorded in an isolated, centralized database, is recorded in blockchain, which is decentralized and which is importantly interoperable with many other solutions. So many other records, tools, systems, platforms can interact with the right recorded in this token, and therefore it becomes much more liquid. You can build many automations on top of that, and you can list it on multiple different platforms and protocols. Another potentially simpler way to think about tokenization is, imagine an investor being able to purchase this right, for example, a piece of ownership in a property, from any point in the world using cryptocurrency or fiat currency independent on what the asset is, where the asset is located, and then be able to sell and trade this asset. This is in essence, from the perspective of user experience, what is enabled by tokenization. Now let's discuss the main benefits of tokenization. We will discuss separately benefits for asset owners and investors. For asset owners, there are three primary groups of benefits: the improved fundraising, the operational efficiencies, and increased liquidity. Improved fundraising means that because the asset can be fractionalized and owned potentially by hundreds or thousands of investors, you get access to more capital, more total capital that can be raised. And also you get improved bargaining power because you now can choose which investors you would allow to participate in the asset, which allows for better terms and higher valuation of the asset being sold. Also, you can now access global audience of both retail and accredited investors, people who want to invest in cryptocurrency, people who want to invest only potentially $100 or $50 who exist in any country in the world. There are certain legal limitations on the number and types of investors you can onboard, but still the accessibility of capital increases drastically. The operational efficiency benefits refers to the fact that as no records exist in a digital database, you can create many automations related to transactions with securities. For example, you can automate many compliance checks and therefore reduce the legal risk, reduce the risk of fraud, and reduce compliance cost. This is especially useful for complex institutional transactions when you have complex data flows with multiple data points being updated, or you have, for example, a dozen participants in a securitization transaction, such as 2 banks, 2 custodians, 2 issuers, a central counterparty, and each of them has their separate record of ownership. And therefore, when you instead use a shared blockchain register, you significantly reduce the timeline and cost of executing the transaction and also reduce the probability of mistakes. The liquidity benefit refers to the fact that currently many assets, such as gemstones or such as mineral reserves that are still in the ground, for example gold reserves, are unbankable. You cannot liquidate them, you cannot get cash using these assets as collateral, which becomes possible thanks to tokenization. Now let's discuss benefits for investors. The primary, most important benefit for investors is increased liquidity. Currently, most assets aren't traded in any market, aren't listed on any public exchange, and therefore when you invest one, you are typically locked in for a dozen of years or even more. And this is a significant problem because A, investment horizon of most people is significantly shorter than a decade. B, the benefit of most assets comes not only from a cash flow they generate, but from capital appreciation, and therefore investors cannot derive the main benefit of investment if the asset is illiquid. So lack of liquidity is a huge problem for most assets that would otherwise be very attractive, and it doesn't allow investors to actually invest in them and enjoy the benefits that can be generated by these kinds of assets. Second key advantage is access to new types of assets. Partly this is because of increased liquidity that make these other types of assets attractive, but also this is because many assets previously have been unbankable and not converted into investable financial instruments, or because many of them weren't available to retail investors or even to accredited investors who aren't institutional grade buyers. So now it is possible to sell gemstones, or let's say cargo ships, to retail investors, which are opportunities they never had before and which significantly increase the versatility of their portfolio construction. Lastly, there is now a generation of investors who are primarily Web3 investors, who don't perceive any other way of purchasing or holding assets different than cryptocurrency assets. At the same time, these investors are interested in more stable and cash flow generating assets that are different from standard meme coins or utility tokens or other types of conventional crypto assets. Tokenized real-world assets bridge this gap and allow this new generation of investors to participate in a broader range of capital markets. Because of these significant benefits, there is an expectation that significant amounts of capital will move into tokenized real-world assets. In particular, according to a survey by Ernst & Young, the institutional investors expect to allocate 5 to 10% of their portfolios into tokenized real-world assets. And since they hold between trillions and dozens of trillions of assets, this means that between dozens and hundreds of billions of dollars will be allocated to tokenize real-world assets, creating a very attractive opportunity even in the short term. Because of these significant advantages, both for asset owners and investors, it is conceivable that all assets will be tokenized, as for each asset there is an incentive for both parties to move the form of ownership onto blockchain. Therefore, we expect literally hundreds of trillions of dollars worth of assets being moved on-chain in the form of tokens. I hope because of this analysis, it's now significantly more plausible for you why I said that tokenization is likely to create multiple billionaires and potentially one or several trillionaires down the line. If you are interested to explore more how you can participate in the growth of this industry, feel free to reach out to Stobox either by filling in the form on our website stobox.io or by sending me an email at bp@stobox.io. We will be delighted to use our experience to assist you in launching a successful tokenization venture, as we already did with multiple clients. Thank you for your attention and see you in the next episode.